So what's your take on the housing price? It's been going up in the past 20 years, but how do you see that move in the next couple 2 years?
Very good question, Pearl. I would say that the property prices indeed have been consistently going up and only up. There was almost no time when it was consistently going down, for a sustained period of time. And therefore, I think there has been a lot of expectation for it to go up in the future. But that has largely been changed in the past 18 months. In fact, starting from mid-year last year, we were the first one to call out a potential policy, over-tightening in the property space. We found that both on the demand side and also supply side, the policies have been too tight. And in fact, on the supply side, it has already pushed up some private developers towards the credit crunch. And at the same time, on the demand side, we think that the mortgage loan suspension has been extremely worrying as well. And that's why we actually cut our GDP growth forecast, and we saw that this very important industry that contributed by as much as 28.7% to GDP was very much in turmoil. In our view, that we think that property prices were probably no longer going to go up during that time, and now we see more reason for it to come down in the near future. The reason is that, number one, we are seeing that a lot more people are expecting property prices to come down rather than to go up. Historically, if you look at the property price expectation and also property prices, there is a very high correlation in between. And this, of course, is also related to the fact that, number two, from a demand side, when people are generally expecting property prices to come down, that even if that you have the demand to get a next apartment, you probably would choose to rent for now. And therefore, by the time that when there is a consensus for property prices to go down, this usually becomes a downward spiral. And therefore, we think that it is hard to turn around the sentiment right away for people to think that it will go up again. But we think that there is more hope, going into 2023. The government is already doing a lot of things, including at local government level, trying to relax all the restrictions, almost all the restrictions outside of the Tier 1 cities to allow more people to buy properties if they want to. And at the same time, we're also probably going to see that the local governments are scaling down the size of land sales going forward, limiting the future supply of land and therefore housing. And therefore, we think that that could potentially help stabilize that property price decline. And in the future, we probably will see some sentiment improvement and finally turn around in new home sales and therefore better expectation. But at the moment, I would just add one more thing, which is property price volatility is actually not necessarily a bad thing to have, in the sense that if everybody is expecting property prices to go up and only up, that implies everybody would be going massive long and borrowing as much as possible, and it would naturally become an overly leveraged sector. However, for regulators, that is a problem, isn't it? So to actually get that problem fixed, some volatility in property price expectation, some people think that it will go down, sometimes everybody thinks that it will go down, may not be a bad thing. So we just think that it could become more healthy this way.
Right. Actually, I think a lot of people actually were complaining about expensive homes in China. And some were saying that actually China has been leaning too much on the real estate sector. So as we are seeing the change now, how do you see the impact on the economy?
Well, unfortunately, the property sector has already been the genie set out of the bottle. So it's no longer something that we can easily just put it back into the bottle, because that it has been contributing to GDP by a very large scale. Before COVID, we're seeing on average in the previous 7 years that the property sector contributed by about 28.7% to GDP. This is taking into account basically the commodities like steel and cement at the very upstream, and all the way to the for example, electronic appliances, cars, construction materials, etc. on the downstream. So altogether, it accounts for many things it goes into GDP, including investment as well as consumption. So at a time when we are looking at the property sector in a bad shape, it does take a very significant toll on the overall overall headline GDP growth. However, we think that if going forward, we probably will see the first rebound coming from the social housing construction, and then followed by the commodity housing side. When more people feel comfortable, they will come back. When new home sales pick up, then we will probably see a better residential construction investment number coming in, and therefore by then we could probably see more consumption driven by that as well.
Right. So as you said, we have seen some supports from the governments, and most recently, we see a lift of the ban on the equity financing, which has been like there for more than 10 years. So I'd like to ask Winnie, what's your take on that? How do you see the investors' appetite on the new issuance if some developers are going to issue more equities?
I think the measure itself is a nice gesture, right? It kind of complete the pie. Initially, they asked the banks to extend the loans, then they start to support the bond market, and now finally equity. And if the developers can raise more equity, it naturally helps reduce the debt to equity leverage, right? Which is a positive thing. But like you said, are there investors, right? Because when it comes to equity market, bond market, it's not something policy direction can dictate, right? It depends on investor appetite. So I would say that in the short term, these policies are more about a nice gesture to give confidence to the market and even the home buyers. It's probably providing enough support to prevent a short-term hard landing, right? To prevent many developers all falling within the next 5-6 months when economy is still suffering from the lockdowns, right? From the weak confidence. But these policies, financing supports are not going to be enough to compensate the weakness from cash flow from the home sales, right? So at the end of the day, these policies can prevent developer from failing in the short term. But for developers to really survive and get out of the ICU, they need home buyer confidence to come back. They need people start to buying the property again.
Right, as you said, they need the confidence to come back. So, Helen, do you think like the entire rescue policy package can actually eventually bring that back?
Well, very good question. I would say that the 16 points and also the CSRC measure that you just mentioned are very helpful gesture indeed from the top decision makers. In fact, at a time when the current administration is outgoing and the new administration is going to come in by March next year, there could come up with such a big set of policies with coordination among different ministries. That was by itself extremely impressive and laudable. However, the thing is, while they are working very hard on both sides, the asset side and the liability side of the balance sheet of these developers, and we do think that it will save quite a few private developers' names from falling out. The problem, however, is that the ultimate recovery, as Winnie just mentioned, it probably would depend more on the reopening policy and the recovery of consumer confidence and business confidence. So it's probably not all about just the property sector policy adjustment that we were looking for. We are indeed waiting for more signs of stabilization coming from the COVID measure relaxation, especially followed by the normalization of business activities.
Right. So it's coming to the end of the 2022. So going to 2023, what's your outlook on the China property sector, on how you see this crisis is going to settle?
Well, we think that going into 2023, the most important thing that we think will probably see policies being able to achieve is that most of the private developers that are left, that are still standing, are probably going to survive, and most of the projects that are currently stalled or unfinished are probably going to be completed and delivered by the end of this 2023. So that will be a very important I would say overarching assumption for future recoveries. Because without that, I think people will just continue to lose confidence in this sector, lose confidence in new home sales, and they wouldn't come back. So only when that is achieved, we would see that people go back to their works and then probably starting to think about investing again. And therefore, we think that by the end of next year, hopefully that we will see those assumptions that we just mentioned that would largely be materializing, and with most of the buyers of the pre-sales units being happily receiving their units and then moving on, and then we could probably see a better recovery in 2024.
Right. So, how about investors? What's investors' perspective on the sector in the coming year?
So the property sector suffered a lot of underperformance, but recently also had some sharp rebound from very low levels. Generally, we remain quite cautious on the property sector, and for investors who want exposure, I think some investors actually use banks as the derivative play, or some insurance companies with high property exposure as derivative play to reduce the asset quality risk, rather than getting directly into the developers whose share prices tend to be highly volatile for many of our longer term investors.